I'm Deborah Owens, America's Wealth Coach, and it's time to get wealthy. You're going to learn exactly what you need to know and do to finally achieve the level of financial success that you desire and you deserve. High inflation, interest rates are going up. Have you seen mortgage rates lately? And the stock market keeps going lower. So are we in a bear market or are we in a correction, or what does that even mean? How do you invest in these uncertain times? Well, that's exactly what I'm going to share with you on today's Get Wealthy. But here's what you need to know, or what the wealthy don't want you to know about what it takes to build wealth in challenging times. First, that old Warren Buffett quote, be greedy when others are fearful and fearful when others are greedy. Next, you've got to be able to look for the opportunities in all of this chaos, because that's exactly what the wealthy do. And finally, this really allows you to buy assets at lower prices. But one of the things I know is that many of you are looking at your 401ks and you're seeing the value of those investments, in some cases, be down lower than 20%. Here's what I want you to know, though. You've got to lean into the fear. And leaning into the fear really means you understanding what it means to build wealth. What you have to understand also is that the economy is always changing. I mean, think about it. We went through COVID 2 years ago, and the truth is that the stock market went up in spite of it. In order for you to invest during these uncertain times, you need to have a strategy. You need a framework and you need a plan. And that's exactly what I'm going to give you, is a plan for succeeding in spite of all of this uncertainty. And of course, our plan for success on Get Wealthy is all about mindset, strategy, and execution. I want to begin with mindset. And I just want to share with you a story about how I learned how the wealthy respond in uncertain times. Now imagine I'm new to the financial services industry and I'm just starting out as a sales assistant with a large investment firm. And at that time, it was Black Monday. And Black Monday is when the stock market fell more than 20% in one day. So think about it. It's taken us all year to be down 20%, but imagine that happening on one day. And so here I am, this young registered sales assistant, and we have all of these people running in, and they're telling us they want to sell. And most of these investors were middle-class investors, because at the time I was in Detroit, where my hometown is, and I was working for an investment company that was right near the Ford Motor Company plant. And many of those investors were workers at that plant who were buying stocks in that company. And so when I saw all these people selling, of course, because I'm new to the business, I'm like, oh my goodness, these people have lost all their money. But a little later on in the evening, some of our more affluent clients, some of the clients with the biggest accounts, came in. And what do you think they were doing? Were they buying or were they selling? Well, the fact is that when they went and sat with their brokers, what I saw was new investment companies, new sales tickets, if you will, buying stock. And they were buying stocks in some of the most, what are called blue chip companies like Procter and Gamble, companies like Colgate, Palmolive. And what that showed me was that the really wealthy people, they look at downturns in the market as an opportunity to buy companies at lower prices. But here's what I want you to know. In terms of the market going down, you often hear the term that, oh, stocks are on sale, buy. But here's what I learned from that experience is that not all stocks are on sale. You need to be able to pick the right ones. And it's typically the companies that are going to do well in a recession. So what does that mean? That means that you have to think about people's behavior and how they change when the economy changes on them. And and I want you to think about this. If it's costing you more to fill up your car, if you're going in the grocery store and what you used to buy for $100 is now costing you $150, how are you going to change your behavior? Well, the first thing you're going to do is look for ways to save. And that's exactly what you should be doing in these economic times. Now it's not about buying what you want. It's about buying what you need. And so having a wealth mindset means that you're going to begin to look around at how people are behaving. And then when it comes to investing, whether it's in your 401k, whether it's in your IRA, you're going to begin to look and see if the investments that you are in are going to prosper with the kinds of behaviors where people want to keep more pennies in their pocket. That's why, in my first observation of what it means to have a wealth mindset, I observed that those very affluent people understood that they've got to make sure that their investments are in quality companies that are going to prosper in recessionary times. When times are tight, you're going to buy what you need, not necessarily what you want. So in order to have a wealth mindset, you have to be able to shift. And now your strategy when it comes to investments has to have what they call in the business a flight to quality. And that means that you're investing in companies that are going to do well in spite of these recessionary times. Hope this is making sense to you, because that's called having a wealth mindset. And when we come back, I'm going to share with you now the strategies that you need to have in these very uncertain times so that you can take advantage of these opportunities at lower prices, but do it in the right way. So don't go anywhere. When I come back, I'm going to talk about strategy.
Let's be honest, as successful women, we're crushing it. Maxed out 401k and Roth IRA? Check. Aggressive savings and investments? Check. Yet, the freedom our success was supposed to buy can leave us stuck on the six-figure hamster wheel, watching retirement slip further down the road. There's another way. Get coaching courses and community at wealthyu.com.
Black Star Network is here.
Oh, no punch!
I'm real revolutionary right now.
Thank you for being the voice of Black America.
All momentum we have now, we have to keep this going.
The video looks phenomenal.
See, there's a difference between Black Star Network and black-owned media and something like CNN.
You can't be black-owned media and be scared.
It's time to be smart.
Bring your eyeballs home.
You dig?
Welcome back, everyone. I'm Deborah Owens, host of Get Wealthy. And today is all about giving you a plan to prosper in spite of these challenging times. What is the strategy that you need now so that you can have a wealth mindset, which I just described, do the opposite of what everyone else is doing, and look at opportunities to now buy things or make your investment in companies that are going to prosper during these uncertain times. So the second part of our framework is strategy. So what strategy should you have in order to identify how your investments in your 401k, your retirement, wherever your investments are, you need to be thinking about, am I invested in the right companies that are going to be able to still do well in these uncertain times? And so I want to describe it to you based on a story. And in my book, Nickel and Dime Your Way to Wealth, I share the story of a parking lot attendant who never made more than $12 an hour. And yet, over time, he was able to build a portfolio that eventually reached 7 figures. Now, when I met him, the value of his investment portfolio hadn't quite gotten to 7 figures, but when I started to look at his investments, I was amazed. And one investment in particular struck me as brilliant. And it just happened to be the first investment he ever made. And it was in one share of IBM stock. Now, if you know the story of IBM, yes, the IBM we know today is a company that has done extremely well and is a blue chip, if you will, in the tech sector. But what you may not know was that back in the 80s, when I described that Black Monday, IBM was laying off a lot of workers and their stock went down more than 20%. For many of the people who were employees, it went down even more. But when I looked at Mr. Earl's portfolio, that one share of stock over time, that $200 investment, when I sat with him after, I want to say 15 years later, that $200 investment had grown to more than $43,000. You can read it in my book, Nickel and Dime Your Way to Wealth. Okay, so how did this man without a lot of income have an investment of $200, grow to more than $40,000, never investing another dime? Well, the way that happened is IBM it continues to pay dividends. And those dividends each quarter, so let me just explain what a dividend is before I go any further. Dividends are how companies share their profits with their shareholders. So maybe some of you can play Monopoly and you go and you pick out the community chest and you get that card that says pay dividends. Well, a dividend is a way that companies, very large companies, reward their investors by sharing their profits. So, I mean, basically you make money two ways, right? You make money with the price of the shares of the company increasing in value, and then you get paid a dividend every quarter. But the reason why Mr. Earl was able to go from $200 to $40,000 is because rather than spending those dividends, he simply reinvested it in more shares. And so I asked him the question. I said, well, what you had this share when IBM stocks went down? And you know what he said to me? He said, Miss Debbie, I was trying to figure out if I could find some more money to buy even more. So the point I want to say to you if you're listening to this or you're watching this program, is what you want to do is have a wealth mindset like the wealthy do. And the strategy you want to put in place is to buy companies that are paying dividends that you can now every quarter reinvest those dividends back into more shares. Because we don't know what the future is going to hold. But, based on what we're seeing, we're going to be in some challenging economic times. But the way you profit in spite of all of it is you buy large companies, again, going back to mindset of people's behavior, where they're going to have to continue to buy their products, whether the economy is up or down. You're going to have to wash your clothes. You're going to Colgate Palmolive or Tide is made by Procter and Gamble. And let me give you one more little tip. One of the ways you can identify companies who have paid dividends consistently over time is that there are a category of companies called dividend aristocrats. And they are 25 companies that are, more than 25 companies, but they're companies who are in the S&P 500, an index of 500 of the largest companies that have paid dividends, that have not just paid, but increased their dividends for the past 25 years. And again, these are the companies that make the products that people want and people need. And so you can not only invest in these companies individually, but another tip I want to give you is that if you're concerned about your 401k, if you're concerned about your investment account, then you can even invest in mutual funds that invest in these same companies. And they're called dividend growth funds. They've invested in the companies that have these dividend aristocrats in them. So I hope this is making sense to you. It's not about being afraid. First, you got to shift to the wealth mindset and understand that the wealthy people do the opposite of most people, but it allows them to buy investments at lower prices. But it's not just buying anything. Your strategy has to be to buy investments or buy companies that are going to do well in a challenging economy. So when we come back, I want to share with you exactly how you can execute and invest in and execute on this strategy. So don't go anywhere. I'm Deborah Owens. I'll be right back.
Don't wait till November 8th. We can vote today, y'all. Early vote started this week.
We're on Savannah State University's campus. We'll be dorm storming today, giving out treats for everyone. We hope to see everyone at the polls when it comes to November.
If you believe we got power, let them know. Make some noise. Put a fist up. I need to see a fist in the air because we got power. Come on, you put it up. Come get your shirt. We're out here in the streets of Savannah, Georgia. James, do not forget to go vote. I got you. If we vote the right people in, we can make a change. We can get these resources in our community.
I am a woman, and it is important that we have the say-so of what we want to do with our bodies.
We're concentrating on entrepreneurism, providing young people with resources and training that they need in order to change their trajectories. We want Black down. Democracy is on the ballot. Voting rights is on the ballot. Voting suppression is on the ballot. I am most passionate about those three combined because they all impact each other.
Savannah is my home. I care about my community, and I care about representation in my community.
Our voices are still going to be heard no matter what kind of obstacles try to come up against us to stop us from voting. We're still going to be standing our ground.
I see the effort that's being made to keep our communities from voting. So that makes me realize it's even more important, because if it wasn't important, they wouldn't be fighting to make sure we couldn't vote.
This doesn't stop this year. This is a forever movement.
We're going to exert our power as a people, walk in our rightful place. We're going to change our communities, fight for our communities, and build our communities.
Welcome back, everyone. I'm Deborah Owens, and this is a program specifically devoted to you navigating your finances in these uncertain times. Our topic is all about you understanding what a bear market is so that you don't become fearful and that you keep your eye on building your wealth and that you learn how to invest just like the very wealthy do. So let me just review the points that I've made so far. The first thing that I want you to understand is that you've got to have a wealth mindset. Yes, the market is going to go down at some point. And what we're seeing right now is what is defined as a bear market. When you see stocks decline from their highs to falling below 20%. And I don't have to tell you, because if you open up your 401k statement or your retirement account statement, your IRA or your investment statement, you've got living proof of that. But what is required in order to have a wealth mindset and invest like the wealthy is that you don't panic. You do not follow the crowd. Instead, you look at opportunities now that prices have declined to buy investments at lower prices. So having a wealth mindset means you're viewing problems as opportunities and you're going to take advantage of lower prices. Now, the next part of that is strategy. So how do you know what to buy and what not to buy? Then you've got to have a strategy like the wealthy. And in my, what I described to you is the insight that I found when I began my career in the investment industry and learned that the most affluent and high net worth clients, when the market declines like this, they don't sell their portfolios. They just go looking for bargains, right? They go looking for bargains for high quality companies whose prices have declined, not because anything fundamentally has happened to their company. Secondly, they look for companies that are going to do well in spite of in higher prices and a recession. People's behavior change. And so what you want to make sure is that you're investing in companies that are going to do well because of people's behavior changing. Now they're going to be a little bit more tight-fisted and they're going to be looking for ways to save money. And so those are the companies that are going to do well in this environment. And so now that was mindset, that was strategy. And so you're probably thinking, well, yeah, that sounds fine, but how do I actually look at my investments? Or if I haven't made an investment, how do I take advantage of it? And so here's the point I want to make. It's not timing the market, it's time in the market. And what that really means is that you have to learn how to invest in products or make investments that are going to automatically allow you to invest systematically and automatically in these different investments, regardless of the ups and downs of the market. So, first off, many of you are already using what is called the dollar cost averaging example because you're investing through your 401k or you're making $100 investments into mutual funds. And that means that every month it's coming out of your paycheck, and whatever the value of that investment is on that date is what you're going to buy that price at. So since the beginning of this year, if you've been investing through your 401k or making a monthly investment plan, you've been buying shares systematically and automatically. Every month you're buying them at different prices, So one of the ways that you can see dollar cost averaging actually in real life and in your life is I want you to simply look at your statement. I want you to look at your January statement and what you were buying, what prices you were buying shares at and how many shares you were buying. And now I want you to look at your most recent statement and look at your shares and how many shares you're buying. And guess what? More than likely, you're buying more shares. And that's really how you win and you build wealth. It's not the price. It's the number of assets that you accumulate over time. The more assets, the more wealth you have. The other point I want to make is for some of you who are just getting started, and maybe you're sitting on the sideline, first off, you may have thought, man, I wish I had been in the market, right? And now you're maybe thinking, ooh, I'm glad I didn't invest my money in the stock market. Regardless of where you are, here's what I want you to know. You can't win if you're not in it. And the fact, and this is what I want everyone viewing this program to understand, that stocks have outperformed any other kind of investment. But in order for you to build wealth and have your money accelerate and grow, then you got to get comfortable with the ups and downs of the market. But here's the good thing, right? Prices have declined. And to be honest with you, after you're watching this program, I don't know if the market is going up or it's going down after this, but I do know it's going to go up and down. So let me give you a secret that I learned from managing wealthy clients and being in the investment industry, is that you just want a system. If you haven't invested yet and you're afraid to put, maybe you've got a lump sum or maybe you've got money sitting in a savings account that you have earmarked for retirement, because here's the point I want to make. Let me just put a disclaimer on this. All of your money should never be in the stock market. Only the money that you can afford to have invested 5 years or more should even be in stocks that are going to go up and down. So now that I've put that aside, now that I've defined when you should be invested in the stock market, what I want to say to you then is one of the other things, if you're saying, okay, stocks are down, but what if they go down further? You can set up what is called a systematic account builder. And many companies will allow you to start an account, even if they have a minimum investment of, say, $2,500. If you agree to take that, if you set up an account and say, I'm going to put $100 a month or $200 a month, and it come directly out of my bank account, Then what you can do is set up an automatic account builder, and you're going to invest in the same kind of mutual fund or a company dividend reinvestment program that is in these companies that are going to do well in an uncertain economy. And those are large companies that are paying dividends. So to execute, many of these companies have direct investment programs where you can literally go to their website and say you want to start a direct investment program, and it will come and you can have that account directly with a company. You can also set up an account with a mutual fund. You can go to a large mutual fund company like Fidelity or T. Rowe Price or Vanguard. Those are very large companies who, guess what? They have mutual funds that are invested in these large companies, and typically they're called dividend growth funds, that you can set up an automatic investment program. And you can have that money come directly out of your account. One of the other ways you can execute is you can actually set up what is called an individual retirement account. And so, you can now contribute up to $6,500 a year in an individual retirement account, have that money earmarked for your retirement. But guess how you're going to set up that account? You're going to set up that account by establishing that IRA with one of those big mutual fund companies, and then you're going to have the money taken out monthly, and you can invest up to $6,500, but you can invest $1,000 a year. You can start out with $100 a month. You can start out with $200 a month. And that is how you get started. So the point that I'm making as it relates to you executing on everything that I'm discussing today is that you're going to take advantage of the ups and downs of the market. You're not going to be fearful. You're going to begin to understand that the way wealthy people have gotten wealthy is because they've stayed the course, but they don't sell. They are investors. They don't panic. They look at downturns in the market as an opportunity to buy assets at lower prices. You've also learned that it's not just investing for investing's sake, that you gotta be smart about it. You've gotta understand that companies that do well because people buy their products and services, and when people's behavior changes, those are the companies that are going to do well. The worst thing you can ever do is panic. I can't tell you how many people I've talked to who, when 2008 came and we had our last recession, they sold. And they sold all of their shares, whatever was in their retirement account, and they never invested again. And as a result, from 2010, even though the recession happened, we had one of our longest bull markets ever, even after COVID, when the market declined. What did we see? Prices continue to rise, and many of these indexes that show these 500 companies or 30 companies like the Dow, and their prices going up in value, they increased to all-time highs, historical highs. And so many people were left sitting on the sidelines and never got to see their money grow. In order to be an investor, in order to win, in order to build wealth, you have to be comfortable with the market going up and down. You have to be comfortable with the economy going up and down. But the fact is, in order for you to build wealth, you have to make the shift to a wealth mindset and begin to understand that it is during these times of economic change that you have the most opportunity. So don't go anywhere, because when I come back, it's our Analyze, Optimize, and Maximize segment, and I'm going to be sharing with you the 3 things that you need to do in order to take advantage of these uncertain times. Don't go anywhere. We'll be right back.
When you talk about blackness and what happens in black culture, we're about covering these things that matter to us, speaking to our issues and concerns.
This is a genuine people-powered movement.
There's a lot of stuff that we're not getting. You get it, and you spread the word.
We wish to plead our own cause. Too long have others spoken for us.
We cannot tell our own story if we can't pay for it. This is about covering us.
Invest in black-owned media.
Your dollars matter. We don't have to keep asking them to cover our stuff. So please support us in what we do, folks.
We want to hit 2,000 people, $50 this month, raise $100,000. We're behind 100,000, so we want to hit that. Y'all money makes this possible.
Checks and money orders go to P.O. Box 57196, Washington, D.C. 20037-0196. The Cash App is $RM Unfiltered. PayPal is R Martin Unfiltered. Venmo is RM Unfiltered. Zelle is roland@rolandsmartin.com.
Welcome back, everyone. I'm Deborah Owens, America's Wealth Coach, and I hope you've been enjoying this special edition that is really here to help you understand how you need to act during these uncertain times. It's not about being fearful. It's about leaning into this fear and taking advantage of this opportunity. So now it's our Analyze, Optimize, and Maximize segment. And here's what I want you to know is that you don't actually lose until you sell your investments. And the reason I want to say that is because in our Wealthy You community, I often hear people saying, oh, I lost money. Well, no, you haven't lost anything. I mean, until you sell it. Now, on any given day, something can have a certain price, right? So here's what I want to do. I just want you to think about your house, right? Like, housing prices went up, and on any different day, you could have a different value. I mean, your neighbor, now we're seeing interest rates are up, home values are going down. You didn't realize that gain. It's just a function of prices going up and down. And so the point I want to make is you haven't lost anything until you actually sell. And the second thing I want you to understand is that in order to optimize and really grow wealth, you have to look for opportunities when the market declines. I know it's kind of counterintuitive, and I know that many of you may be fearful, but the key is having different eggs in different baskets and understanding that the market going down, the economy going down, there's one thing that's certain: change. And it's how we respond to that change, which will determine whether or not we build wealth. And then finally, listen, if you've watched this show at all, one of the things you know is that in order to build wealth, you have to think long term. It's not about what is happening day to day. It's about you being an investor and knowing that over the long term, you're going to win, because it's important that you don't react to short-term volatility, but that you are truly a long-term investor, because that's how you build wealth. So when we come back, the 3 takeaways that you need to have from today's show.
Don't wait to know November 8th. We can vote today, y'all. Early vote started this week.
We're on Savannah State University's campus. We will be dorm storming today, giving out treats for everyone. We hope to see everyone at the polls when it comes to November.
If you believe we got power, let them know. Make some noise. Put a fist up. I need to see a fist in the air because we got power. Come on, you put it up. Come get your shirt. We're out here in the streets of Savannah, Georgia. James, do not forget to go vote. I got you. If we vote the right people in, we can make a change. We can get these resources in our community.
I am a woman, and it is important that we have the say-so of what we want to do with our bodies.
We're concentrating on entrepreneurism, providing young people with resources and training that they need in order to change their trajectories. We want Black down. Democracy is on the ballot. Voting rights is on the ballot. Voting suppression is on the ballot. I am most passionate about those three combined because they all impact each other.
Savannah is my home. I care about my community, and I care about representation in my community.
Our voices are still going to be heard no matter what kind of obstacles try to come up against us to stop us from voting. We're still going to be standing our ground.
I see the effort that's being made to keep our communities from voting. So that makes me realize it's even more important, because if it wasn't important, they wouldn't be fighting to make sure we couldn't vote.
This doesn't stop this year. This is a forever movement.
We're going to exert our power as a people, walk in our rightful place. We're going to change our communities, fight for our communities, and build our communities.
Welcome back, everyone. I'm Deborah Owens, America's Wealth Coach, and I hope you enjoyed today's show. And I want to encourage you, if you've got family members, if you've got friends who are afraid of the market, afraid of this economy, share our program with them on demand, because you'll be able to watch this on the Black Star Network app and on YouTube or Facebook. But here are the 3 takeaways from today's show. First, don't follow the crowd. If you want to build wealth like the wealthy, you have to look at, secondly, problems or opportunities, because that's what they are. Even in a declining market, you can find possibilities in volatility. I'm Deborah Owens, America's Wealth Coach. I hope you enjoyed today's show. I hope that you will share this with your friends and family. And by the way, make sure that you go to wealthyu.com's website so that you can get a free copy of our Investing in Volatile Times CD. That's going to do it for me today. Thanks so much for joining us on Get Wealthy, only on Black Star Network.